It was a shocking news that came this morning when we heard from pretty much any financial, media in the U.S. disclosing the news that the SEC is fining Kim Kardashian $1.26 million over Instagram posts touting cryptocurrency. So let's dig deeper and see exactly what went wrong, what is going on, what the SEC, which is kind of the police of the stock market, is charging her of, and what should you take as a takeaway lesson for your own money. Because trust me, others may be coming out in the near future. So you need to be careful. Getting into the news here, the history or the story. Today, the SEC, disclosed that they find Kim Kardashian, the pop star, the star, of reality TV, and the ex-wife of Kanye West, to pay $1.26 million, so $1.26 million over an Instagram post she did back in 2021. So if you go back here, you can actually get to the cryptocurrency and the details around this whole story. There was a class action lawsuit claiming that the token or the crypto named ethereummax that she promoted on 2021 on her Instagram account was actually closer to what we call a pump and dump. If you don't know what it is, be patient. We're going to get into it in the next few seconds. So, June 14, 2021, Kim Kardashian is promoting a little known crypto company called ethereummax to her 225 million Instagram followers. Are you guys into crypto? She asked. A week later, the price of ethereummax, or EMAX, this is the ticker, this is how you can find that onto the crypto platforms, had fallen 50%. And the volume of trade in the token had dropped by nearly 75%. The price of the coin never recovered. Never recovered. So anyone who followed Kardashian's advice lost a bundle, which is what we call, in our jargon on the financial, holding the bags. Does that seem familiar? Yeah, I know what it is, man. Now, the reality TV show stars posted on Instagram was the last of several celebrity endorsements where EMAX had rallied upon to drive up the price of the coin they had released in May of 2021, according to a class action lawsuit filed in federal court in California by numerous investors. Now, the thing is, the actual funny thing here is that when she made the post kind of promoting this token or this cryptocurrency, ethereummax, which I've never heard of before, actually it made the price go up because a bunch of people who are following Kim Kardashian, were thinking that, this is something worth putting my money into. This is something worth investing my money into. So they start buying. And that's what brought the price to go to new highs. It went to the moon, as we call it, meaning it went to, all-time highs. But just 1 week later, something very, very, very strange happened, which is not common to the crypto world. The price dropped 50%, but the trading volume pretty much disappeared. Why? Because it rumors that the founders of this crypto has taken all the money and they sold, prompting the prices to drop 50% and the volume trading to drop 75% because nobody else was buying it. Because the founders themselves, when the prices went up, they took everything and boom, they ran away, leaving people who bought, like you and me, with the back holding of losses. And that's what, triggered this class action. So investigation went on. The SEC was involved because the SEC is now in the midst, alongside the White House, to regulate this market because it's new. Well, not that new, but new compared to other assets or trading assets such as stocks, such as the real estate market, because a bunch of people, like tons and tons of people around the world, have been repeatedly cheated and taken advantage of. Literally like this same schema, what we call a pump and dump. So a pump and dump is really like somebody will prompt people or drive people to buy a certain asset. And then when the price keeps going up because people are in demand, or are chasing this because of the demand, it pushes the price higher and higher and higher. But those who know exactly why the price is going up, they can kind of dump a boatload of these assets, pushing the price down significantly. And that's what happened here. Now, the SEC is trying to break down on this, and the White House is actually working and has been working for the 2 last years on putting out a regulation, all right, because this has been going on for years and it just can continue to do so. All right. Now, where and how Kim Kardashian, partakes in this is really interesting. Now, because the SEC were doing the investigation, of course, her name had to get out. But what really was striking around this is that she was paid a significant amount of money to do so. She was paid $250,000. Kim Kardashian posted about ethereummax and its Emax tokens on her Instagram, but she did not disclose a $250,000 payment from the issuers to publish the post. The SEC regulators wrote in the decision on Monday. Even though on June 2021, she posted and add the hashtag ad at the bottom, but the regulators alleged she was still unlawfully promoting the token. And as a result, she, neither admitted nor denied the allegations. So it's not true, but it's also not false. This is really literally, usually the attitude that, people that are charged will adopt because they don't want to incriminate themselves by admitting they did so. So, in order to settle things down, she paid $1.26 million as a fine to settle the matter. All right. Now, the thing is, this is not the only celebrity that is being caught up in this whole thing. There are a bunch of others. As you can read here, others have come under scrutiny for unlawfully touting cryptocurrencies. The SEC Chairman Gary Gensler said on Monday in a CNBC interview. Count people like boxer Floyd Mayweather and then hip-hop impresario Gigi Khaled or actor Steven Seagal in those ranks. And I'm pretty sure a bunch of other people are also involved, and the SEC is looking into those cases. When celebrities and influencers endorse investment opportunities, including crypto asset securities, it doesn't mean that those investment products are right for all investors. That's what the chairman of the SEC, the police of the stock market, is saying. We encourage investors to consider an investment's potential risk and opportunities in light of their own financial goals. Now, I do believe this is kind of, the way of doing marketing. You identify and you find, a really influential, person or persona on social media, on real life, actors, celebrities, and you use their fame as, an avenue for you to promote your stuff. This is old school marketing, or old school marketing 2.0. All right. Now, where the line is being crossed is when it comes to investing your money. The average income in the US is roughly $60,000 per year. Somebody gets paid $250,000 just to do that post based on the fame they have on, social media or outside of social media. Now, because people lost money, it means that not only they lost money, but they lost money because of a pump and dump, which is another illegal way of, kind of scamming people. It's a whole scam when it comes to the stock market or the crypto market, all right? And that's why the SEC get involved. So I guess my kind of rant here is, first off, if you're somebody willing to use your name or your fame, which is ultimately your name at the end of the day, to market for anything, make sure you did your own due diligence. And that's where I think Kim Kardashian team and her himself, included, did not or kind of, miss the mark. They dropped the ball there because You don't want to make sure your name is associated with, scandals like this. I mean, $1.2 million is nothing for her because I think she can make that in just one post from another brand on her Instagram or her Twitter account. No big deal. But for people who lost almost entire sum of money because they thought if Kim Kardashian is promoting this, it's maybe because it's a good thing. She's looking after her followers or subscribers. Nope, that's not the case, And that's why, the SEC mentioned the $250,000 check she got by doing the post on Instagram for this company. So the company is shady. The company was a scam, the company was a fraud, and their token, the cryptocurrencies, never ever recovering is another illustration, another fact that it was a total scam. So a little bit of shame from her and from the whole team, PR, marketing, whatever. Now, the second takeaway here for you and I is, okay, social media is a good thing, but you can use social media for stuff that are actually not good. And that's where we need to be really, really smart in our approach, because the stock market today is a lot more accessible than it was, 10, 20 years ago. Social media has a big role to play in that. But everybody or anyone just taking the camera, and sharing investment advice or tips is not necessarily something you should take for granted, or you should take them for their word, because first off, nobody knows exactly what the future holds, which is kind of the big point here with the stock market. You invest in something now because you expect it to grow in the future, right? But there are people that have an education like me. I went through business school and I majored in financial markets and investment. So I kind of know a little bit what I'm talking about here when I cover the stock market or any other investments. And that's one. Second, I also do it on my own. I do invest on a daily basis, on a weekly basis, on a monthly basis with crypto, stocks, ETF, mutual funds, etc., etc. So I'm kind of sharing what I'm doing, and not to say that it's always, I'm always accurate, I'm always know what I'm doing. But the bottom line is I have a background which kind of gives me that authority to speak on these things, even though it's just an opinion, all right? But even if you go to a financial advisor, it doesn't mean that, these sort of things cannot happen to you, just because nobody knows what the future holds. But you need to make sure that, and I'm going to end with this, you need to make sure that have enough coverage on your investment sources, because if you are just kind of waiting on somebody, especially if they are influencer, if they are famous people, because usually famous people, this is a job for them. They work their asses off in maybe the cinema world, the theater world, the Hollywood world, the music industry, or anything else, and they're kind of using that to gain significant amount of money through this kind of gigs. But unfortunately, they may not know, as much as others, all right? And that's why even if you're following somebody like me, you need to make sure you have enough other coverage in order to make sure you have other angles, because I may see stuff, but, somebody else will see it a little bit differently or may have another opinion. So never ever take investment advice from somebody on social media, not because it's not good, but because before actually putting your money into that investment, you need to make sure you did your own due diligence. And if you do that, it's not because somebody told you to do so, it's because you agreed based on your research that what that person said actually matches what you already had in mind. Make sense? Yeah.